Okay, welcome guys, this is Melody FS Academy. If this is your first time of coming across this channel, please do well to subscribe to this channel. Turn on the notification bell to get notified when we upload our weekly content. So this is going to be the first episode on the weekly outlook series. Okay, so we're going to start from the dollar index. Okay, so obviously you can see I have my that range marked out. Okay, so the next episode that's coming up the on the smart money trading model is actually going to talk about how to calibrate this, okay, and what are the uses. Okay, so I'm not going to more like discuss about it on this episode. Okay, so this episode is simply all about uh weekly outlook. Okay, so before we proceed, I would like to quickly put out this disclaimer. Okay, so these are not trade signals. Okay, so the weekly outlook series are not signals. Okay, so I'm just putting it out to share my trading plan with every one of us. Okay, so this is what I'm actually going to do throughout the trading week. Okay, so unless there is a change in price action thereabout. Okay, so this is basically what I'm going to be doing in my as my trading plan this week. Okay, so these are not signals. I'm sharing this for to study. Okay, so I'm sharing this with us so we can use it as a reference point of study. Okay, so let's start from the DSY. Okay, so let's start from the DSY, and a short thing about the EBITDA rate is that we already know from the last episode that we expect quarterly shifts on every 3 to 4 months, right? We can decide to use the 3 months interval or the 4 month interval. Okay, so this is actually the use of implementing the use of 3 months right now. Okay, so our next quarterly shift is probably going to come up in July 1st, which is next month. Okay, so that's why I have this vertical line delineated. Okay, so I'm basically expecting a quarterly shift on the 1st of July. Okay, so now with that said, let's get down to this price action. Okay, so now this is basically the DSY, right, and this is the 4-hour time frame. This is basically my I'm using this time frame as my higher time frame. Okay, so now the DSY, you can see we had a kind of consolidation. Okay, so price literally went above, broke structure to the upside twice. Okay, price broke structure to the upside, as you can see, twice. All right, so the last one eventually shifted market structure bearishly. Okay, the last one eventually shifted market structure bearishly, as we can see. Okay, so there is no time to add test. Okay, I'll just rush through it swiftly. Okay, now basically we had two things right now. Okay, the market seems bearish and at the same time bullish. So why am I saying market seems bearish and at the same time bullish? Okay, notice this range. Okay, notice this dealing range from that low. Okay, so now notice we had this fair value gap, right? We have this fair value gap right here that price has just reached for. Okay, that price has just reached for and is below this kind. Okay, so smart money accumulated right here. Okay, and they are going to offload that long positions. Okay, so yeah, they're going to sell, at premium, right? So why did I use this range? You can decide to use this range as well, but why did I make use of this low to calibrate this whole trading range? Okay, it's obviously because we had this low took out set stops. Okay, took out buy set stops. Then obviously we also have a fair value gap below this low. Okay, so price might wish for that. Okay, so I have to give room for this fair value gap. That's why I made use of this trading range low. Okay, so now price is already bearish, as we can know it on the DSY. Okay, price is already bearish, as we can know it on the DSY, and currently we are trading inside of this fair value gap. Okay, we are trading currently inside of the fair value gap. Okay, so my line of action will be to the plan, or the idea rather, will be to look for a shift in market structure on the intraday chart. Okay, so let's look at how that goes if it has already happened. Okay, I don't really trade on Monday. I don't do trade on Monday. Okay, so now this is that fair value gap that we reacted of. Okay, and this is that trading range that we are actually in right now. Okay, so this is that shift in market structure right here, and this is that dealing range that we are currently trading at. Okay, so now obviously price is currently trading in this 4-hour fair value gap. Okay, so you can see price is still bullish on this is our dealing range. Okay, this is the last swing low that broke structure to the upside. Okay, so until this swing low is violated, price is still very much bullish. So as you can see, price started retracing and we got this swing low got taken out right there. Okay, so this is our shift in market structure. So this is our shift in market structure, and let's go back to see if we have if we had a shift. What's the range? Okay, let's look at the range. So we had this short-term low, sorry, short-term high that shifted market structure to the downside. Okay, so our retracement started from this particular candle. So let's look at that from this high to this low. Okay, so you can see obviously we had this fair value gap, so this will be my point of interest to look for a short. Okay, and remember I don't trade on Monday. Okay, so I didn't take this trade. I'm just sharing my line of action. Okay, what I would have done. So this would have been my point of interest, and I would have looked for a short right there. As soon as this candle traded into that, I would have gone to my lower time frame. Okay, and I would have time to do that right now. So obviously my next line of action on the DSY, since we are bullish, since we are bearish on market structure, but at the same time considering the possibility of smart money reaching for liquidity. Okay, that is resting above this old high right here. Okay, this old highs, I'll view that on the 4-hour time frame. Okay, but I just want to show something right now. So considering looking at this market from the perspective of market structure and liquidity. Okay, market structure is bearish, right? Market structure is bearish right now, but as you can see, obviously we have this run above this short-term high, right, which is a short-term premium, and this fair value gap has been filled in completely. Okay, has been filled in completely, and a little bit you can see we also have another fair value gap above. Okay, so if I would short on this market, my stop loss would have been above here, and my first TP would have been on this short term low. Okay, so obviously this range right now looking at this range right now, there is no much of an institutional reference point to use. Talking about this range high, low to this high. Okay, if we measure that out to get an exit, if we were short right here and our stop loss was above here, where would be our exit? So our exit would probably be this is that. Let me hide this other Fibonacci so that they don't confuse us. Okay, so now we have the run up into that fair value gap, right? So this is our dealing range right now. Okay, and this is like a retracement inside of this range, right? So if this market gets taken out, that means structure has shifted on the higher time frame. Okay, so the higher time frame is still very much bearish. Okay, until this old high gets taken out. So this is just a retracement, right? A retracement into a point of interest, which is that 4-hour fair value gap. Okay, and we are already seeing a shift in market structure right here. Okay, so we have seen a shift in market structure, and price has already reached into a point of interest, which is this fair value gap. Okay, so we are assuming that we are already short on this market, although probably if you had not, if you had taken out some partials and trade your stop loss, you would have stopped out on a break even right now. Okay, but currently we're going to watch this price tomorrow. Let's see what happens. Okay, so if this market is probably going to continue going up, it has to be bought from discount, right? Obviously the market just bounced off equilibrium, and we had this last down candle before this whole move, right? equilibrium. Okay, so but our buyers still remain bearish until this high, this short-term high is taken out. Okay, we have an intermediate term high, sorry, because we have a short-term high at the left and a short-term high by the right. So this is uh, an intermediate high. Okay, so now price, as we can see, it is currently has filled that 15-minute fair value gap completely. Okay, so so where will be our process, exit? Okay, we'll be to look for an exit in the favor in the discount side, okay, of this range. Okay, so now the that will be to look for a kind of, there's no much of a fair value gap. Okay, we don't have much of fair value gap, and the fair value gap seems kind of tight. Okay, so let's look at this. Okay, so we have one right here, so this will be a good exit. Okay, this right here would be a good exit. Okay, so this will be a good exit. This fair value gap right there to exit from. If we were short here, so if I was short here, this would be my exit. Okay, I will look to exit right there, or probably take out some partials and watch if price. And also we have this fair value gap below here. Okay, we have this huge fair value gap below here. So if price is probably going to continue bearish, is definitely going to take out this short-term low as a continuation to the downside. Okay, but looking at it at the same time from the 4-hour perspective, okay, looking at this price action at the same time from the 4-hour perspective, price, although currently trading at this fair value gap, okay, and you can see we are making an attempt to go down. Okay, you can see we are making an attempt to reach down back into this range. So this will probably be our overall target. Okay, our overall target. But as currently our price is consolidating right now, right? Price is kind of consolidating. So my next line of action tomorrow now will be to watch price if it's going to look for a sell. Okay, look. So probably I will be looking for short the DSY down into this area, or this outlook as a continuation downward. Since my higher time frame is on the market structure perspective is telling me that market structure is currently bearish. Okay, so I'll be looking for a short on the DSY, or unless there is a change in price action. Okay, unless I have this old high gets taken out, that will be a shift in structure on the higher time frame. So this particular wood high, okay, let me look at that. Let me show you that on the 4-hour. Okay, so which is this high? So this is the high I was making reference to on the lower time frame. Okay, so if this high should get squashed, okay, taken out, that is shift in market structure on the higher time frame. Okay, so the DSY will then be bullish. Okay, I will then change my bias from bearish to bullish. Okay, so right now going into tomorrow's trading, looking at expecting a bearish DSY. Okay, unless price decides to do what it knows how to do best. Okay, so alright, that will be all for the DSY. Let's look at other pairs. Okay, so let's look at the futures market, S&P 500. Okay, S&P 500. And so like I already said, guys, this is just my trading plan for the week. Okay, so these are not trade signals. Okay, so I'm not telling you to go into the marketplace using the opinion that I'm sharing on this video. Okay, I'm actually giving you a kind of study guide. Okay, so you can compare it with your own analysis, and maybe you might to see if we might likely get on the same page. Okay, so I'm giving you a study guide, so just look at it as a study guide. Okay, so now I want to be brief because I don't want the lesson to be too long. Okay, so now this is mini S&P, right? So we had a little bit consolidation right here, and we had the market drop down, broke structure to the downside. Okay, so this will be a break of structure, and at the same time a move below a short-term low. Okay, so this is a move into a short-term discount, right? And obviously from what we can see right now, if we are expecting a bearish DSY tomorrow, we should expect a bullish futures market, right? S&P 500 should be a little bit bullish. Okay, so now looking at in terms of price actions, okay, this is our dealing range, right? This is the that's short term high that broke structure to the downside. Okay, so now we are currently in the discount side of it. Okay, we are in discount side of the trend, right? So let's look at that and looking at measuring that. So now going into tomorrow's trading, if I'm looking at the futures market, this is what I'm going to be doing. Okay, so I already have a fair value gap right here. Okay, and another one above. So that's two reference points. Okay, that's two reference points. Now the idea will be to look for a long entry down here into that fair value gap. Okay, the idea will be to look for a long entry down here into this fair value gap. Okay, so for a move into this fair value gap, I'll use this as my exit, and I'll look for a short from there downwards. Okay, so I'm going to try and look for a long into that, and let's see if we can get a short from this, since market structure is bearish. Okay, but at the same time I want to draw our attention to this vacuum block that is resting above here. Okay, so now we are approaching the market with a the perspective of market structure and the same time perspective of liquidity. Okay, so price is probably going to, price is always fishing for one of two things, right? Liquidity or imbalance. Okay, so we have this vacuum block right here, so price is going to look to refill that. Okay, and when is it going to do that? That is the only time we don't know. Okay, so price might not likely reach for this week. It might likely seek to rebalance this week. Okay, so but I'm considering this liquidity, and I'm considering this vacuum block and the liquidity above this short term high. Okay, but I'm also respecting the idea of market structure. Okay, so what the best line of action is to look for a long here. Okay, get an exit right there and wait and move to the sideline, and watch if price is going to continue, is going to shift in structure and resume the underlying trend going short. Okay, so if we decide to continue going up and takes out this short term high and start to reach for this imbalance up there, then this might actually be another reference point to look for short down. Okay, so but for the for the short entry, okay, the short target is going to be to look for long there, and let's take a look at how that looks on the 15-minute chart. Okay, so this is that fair value gap, right? This is that fair value gap, and so the idea will be to look for a long. So today's price action, let's look at the midnight opening. Okay, so we had a move down, and obviously price action was a bit sloppy. Okay, so going into tomorrow, I'm going to look probably over the midnight, over the night, it might reach for the fair value gap, and then I can position myself to look for a short entry. Okay, above within this fair value gap to go short as a continuation. Okay, so but eventually if it keeps pressing higher, and if it keeps pressing higher, then I'll I will have these levels in mind that price is probably wishing for this vacuum block. Okay, for this vacuum block to refill it. Okay, so now that will be all for this price for this particular pair. Okay, so the idea is I'll look for longs into this fair value gap, then move to the sidelines and watch price to see to show the willingness of wanting to go lower from this institutional reference point. Okay, so that is my idea. So that's the plan, that's the trading plan of what I'm going into this week with as from tomorrow. Okay, so mind you, I don't normally look at a lot of pair at a time. Okay, so I'm more or less focused on one pair at a time. Okay, so I might not actually trade all these pairs I'm analyzing right now. Okay, so we all know that the US 30 and the um, the E-mini S&P 500 moves have the same price action. Okay, tends to have the same price action. Okay, so we are obviously looking at same price action. Okay, we have a move below a short term low, which is obviously a move into a short term discount, right? So the idea would be to look for longs into that fair value gap up there. Okay, so we obviously had another move lower. Okay, so now but we had this fair value gap, right? We have this fair value gap. Okay, so the idea will be to look for longs, and as you can see, prices are is almost reached for the fair value gap. Okay, so the idea is once price goes into this level, this is a point of interest, and I'm going to try and look for a short from this level. Okay, if I have from the intraday time frame. Okay, so if I have a shift in market structure on the 15-minute time frame, then I'm going to look for a short down to this lows. Okay, to this low. Alright, so that is just that, and probably if price decides to keep pressing high up and takes out this short term high, then the idea would be to move to the other side and go with longs. Okay, to start look for long entries, because this will be viewed as a shift in market structure on the higher time frame. Okay, so let's move to another pair. Okay, US 100, the same price action. Okay, so I was actually looking at this price action last week. Okay, I had this vacuum block as a point of interest. The market gapped down, so this is a vacuum block, and as you can see, I forgot to make the video on the to share the video as a live trade experience, but this was a good move. Okay, so we got in right there and exited right here. Okay, so that's a lot of move. So now obviously we are looking at the same thing, the bearish bias. Okay, so our bias is bearish, and as you can see, price has just moved below the short term low, right? Price has just moved below a short term low, and our point of reference would be this our institutional reference point will be this fair value gap, right? So the idea is to look for, and as you can see, price is respecting this fair value gap. Okay, you can just see it's respecting the lower part of it. Okay, so and you can see we also have a higher fair value gap. So if price goes into this institutional higher time frame reference points, I'm going to go down to the 15-minute chart and try and look for a short. If it gives me a shorting opportunity, then I'm going to look for a short down to these levels. Okay, so that will be a nice this will be a nice asset to study for the week. Okay, so obviously, like I just said, I'm not going to trade all these pairs. Okay, I'm just sharing this for what's it called, as a point of study. Okay, so now obviously we are looking at the same thing, a move below a short term low, institutional reference points right here. Okay, this market is probably reaching for the liquidity that is residing below this low to go. Okay, it wants to run this sell side liquidity and probably accumulate more long positions to go up. Okay, so that probably anticipating that is what is wishing for, the liquidity below this old low. Okay, so the idea remains the same thing. We look for a long positions below in the discount side and exit at this fair value gap and look for a short as a continuation. Okay, but if the market decides to press higher, and we would already be out, right? So by why are we exiting at this fair value gap? Okay, because market structure is suggesting that we are bearish. Okay, so if we decide to hold on and with the and if we decide to hold on for this vacuum lock, okay, which we are not that quite sure if price is going to wish for it this week or tomorrow. If price decide to start trading lower, we are going to get on the wrong side of order flow. Okay, so by going long, by looking for long and exiting our long position at this fair value gap, we'll be able to position ourselves with the expectation of price reacting of this fair value gap to go lower. But if it decides to continue going higher, we can then and take start this short term high, we can then position ourselves and start looking for long entry. Okay, so a missed opportunity is better than a lost trade. Okay, so that is just what I'm going to be doing, watching this space. Okay, so obviously Nasdaq and US 500, they all have the same price action as the others. Okay, so basically the same thing. We have an old low, right? Made another run lower, fair value gap, look for a long and exit right there. Okay, if it decides to go higher, then we'll watch until price decides to go higher for this fair value gap up here. Okay, then if it takes at this short term high, it's probably going to take it out and there's going to be a form of retracement before it finally reach for that. Okay, but if it reaches for that in one go, you can still look for the same thing. Okay, the same thing that we are going to be doing with this fair value gap is what we are going to be doing with this. So if it decides to go at it with a single, maybe with a dynamic move. Okay, so what I'm trying to say is that if eventually, let's say we get an entry, a long entry, if I get a long entry down here, okay, and I exit the market in this fair value gap, okay, then I move to the sideline and watching price, and eventually price decides to know create a dynamic move into this fair value gap and reaches for this fair value gap. uh, the idea will be to look for a short entry as well. Just like as I'm looking for a short entry and on this fair value gap, I'm going to be looking for a short entry there into this range, into the range that's going to be created as price reach for this as price reach for this vacuum block. Okay, so the others, I'm going to look for a short there, back down into the range, and probably look for another continuation leg higher since price has already taken out this liquidity. Okay, taking out the short term high and shifting structure to the upside. Okay, so that's basically what I'm going to do. So the idea is, even though it may look like I'm missing an opportunity, I'm missing a big move, but actually filtering out my trade. Okay, I'm actually filtering out the trade and you know playing safe. Okay, so I'm actually filtering out the trade, or is it more like reducing my risk or that? Okay, so if price decides to reach for their fair value gap, I'm going to get in there short and look for get out below the market, below 50% midpoint of the range that's going to be created as it reach for this vacuum block. Okay, so why am I getting that? Because structure has shifted into bullishly. Okay, so if I don't probably exit, so I'm getting out at discount because I know structure has shifted bullishly, but we still have a tendency price have there's a probability that price might just likely want to continue going down lower. Okay, so if I getting an exit below the midpoint is going to put me to the sidelines, of which I know, but at least I'm getting out with something, and I'm going to watch price for if it's going to show the willingness to continue going up. Okay, so if we have a second break of structure to the upside, then I'm going to look for a long position on the retracement, or if it retraces back down and I take my exit off at below the midpoint, then I'm going to look if it's going to show the willingness to continue going higher. Okay, so that is the line of action. Okay, so that is going to be my going down, probably going to skip the Nasdaq and move on to the rest. Okay, so I'm going to rush this, or I'm going to rush this up. So now looking at the Aussie dollar, okay, remember we are expecting a short term bearishness on the DSY, okay, so but I'm going to try and do this without looking at the DSY. Okay, so now we have a run on liquidity, shift in market structure, consolidation, and in the retracement, short-term retracement into this fair value gap, another break of structure to the upside, and we had this short-term low as a low that broke structure to the upside, right? So now price has traded below this low, okay? Price has traded below this low, and market structure is suggesting that we are currently bearish. Okay, so this is like a retracement back into this range, into this daily range. Okay, so what is there an institutional reference point that we would probably like to look for a short at on this range? Okay, so that would be something like this. So this is our daily range, right? So let me add the annotations. This video is going to be very long. Okay, so I think the next time I'm going to do this, I'm going to add my annotation on the ground before we, instead of doing it as we go. I'll just probably add everything and explain what I'm looking at, what I'm expecting price to do. Okay, so that way the video gets short and not too long. Okay, so let's look at this. So this is our shift in market structure, right? So a move below a short-term low, which is a move below a short-term discount. So now the idea would have been to look for long entry down here and exit in an institutional reference point. Okay, so that would look like something like this. So if price comes to this fair value gap, I'm going to look for a shift in market structure on the lower time frame, okay, to go short at from this. Okay, so I'm going to look for a short from this fair value gap and aim for this low and this low. Okay, so that will be all for the you can see, although we reached into the premium side and starts retracing a bit, okay, but price has not made it to that reference point. Okay, so I'm going to watch price as a reach for this. Okay, so maybe my likely, if it gives me an opportunity to go short from here, then my first target will be this and my second target is going to be this low. Okay, so hold it down. I'm going to rush it up now from here, so the video don't get too long. Okay, so this was something I was discussing about this with, I was sharing an analysis with the community on Telegram. Okay, so obviously we have a stop run, shift in market structure, a retracement. So this is bullish, right? So now, although we are consolidating, we are expecting a expansion to the upside. Okay, we are expecting a higher leg up since price has already shifted in structure. Okay, so the idea would be to look for long, right? So now looking at this range, so we have two ranges here. Okay, so you can look at this range, which is a move below 50%, right? And currently we are in the premium. So although price is consolidating, we are still very much in premium. Okay, if we decide to use this range, which is the one that shifted structure up, so this is originally our dealing range. Okay, so now price, as you can see, reached below that, and although it's consolidating, the idea to look for long is already too late. Okay, we have already missed the opportunity to look for long entry. Okay, we have already missed the opportunity to look for a long entry. Okay, so if it decides to dip down one more time into the discount side, okay, the idea will be to look for it if it will move below this short-term low or the bodies of this candle, okay, as a rejection block. Okay, so if it decides to dip down one more time into below the bodies of the candle, we can look for a long, entry. Okay, and our target is obviously this high, and my target is this high and into this fair value gap. Okay, so that is all for the Euro USD. So my bias is bullish on the Euro USD. Okay, so my bias is bullish on the Euro USD, and let's look at the Great British pounds. Okay, so these are all price action that I did the previous week, and let's hide this. Okay, so price action is clear. We had a consolidating market, traded to the downside, then went below and a short-term low, which is discounts accumulated and moved back. Okay, shifted the structure to the upside. So this market shifted the structure to the upside, and we are currently bullish on the GBP USD, okay, British pounds against the dollar. Okay, so now this will be our shift in structure. Obviously we reach for a fair value gap and we asked off it and trace back down, and this is our current dealing range. Okay, this is our current dealing range. So now we have this. So this is my current dealing range, and currently we are trading in, although we have left the discount side. So this would have been my point of interest, right? If I had traded today. Okay, obviously today's price action starts, today's 20th, okay, starts from here. So we are very rich for that fair value gap, so we are expecting a higher price leg up. So the idea would be to wait for us to see an expansion above this short term high, or if price decides to give us an entry by going down one more time into the discount side and probably low this old low into this other block, then we might probably look for a long entry to join this already move that is, showing a kind of willingness to go up. Okay, although the movement is not much, but it's showing that it wants to go higher. Okay, so my bias on this is bullish until we see maybe this short-term low taken out. Okay, so my bias is bullish. In terms of market structure, my bias is bullish, very very much bullish. Okay, so I'll be looking for a move above this fair value gap, above this old high to this fair value gap, or probably into these clean highs, old high right here. Okay, so now going down, the pairs are much. Okay, the pairs are much. I'm going to be rushing it up. This is our first series, like I said, and I don't want it to be too long. Okay, I don't want it to be too long, and it's obviously too long right now. Okay, so now the next idea of this is, you can see we are bearish and we have this old short-term low, right, being validated, and we have a shift in market structure right there. Okay, so price trade up, retraced a bit back down into this other block. Okay, or you can use this, since this is the biggest, that has the most range. Okay, that has the biggest range. Okay, so this is our other block. Okay, and as you can see, this is our current dealing range, and obviously this is we already have a missed opportunity right here. Okay, so the idea is to wait on the sideline on this pair. Okay, the idea the good the idea now will be to wait on the sideline. Okay, because we have this fair value gap, price has already reached into it, filled it completely, traded into another block, and it's showing the willingness to go higher, to go up, to expand higher. Okay, so the idea will be to wait for it to take out this short-term high as a continuation upwards, or if it dips down below the discount level one more time and goes below this old low or the body, then we can then look for a shift in market structure on the intraday time frame to go up. Okay, so my bias on this pair, on this New Zealand dollar is bullish. Okay, so USD JPY. Okay, USD JPY, let's see. Okay, this is sloppy. This price action is kind of sloppy somehow, but we had a kind of sloppy move, right? Then we had a move above. Notice we went above this short-term high. Okay, notice we went above this short-term high, right? We went above this short-term high and it dipped down. Okay, so now looking at this range, from this range low up. Okay, looking at this short-term low as a dealing range. Okay, as a dealing range up, price, as you can see, reacted off this fair value gap. Okay, price reacted off this fair value gap. Price reacted off this fair value gap. Okay, and we have another shift in structure to the upside. Was the high that broke this low into this fair value gap. Okay, so now the idea was, as it starts retracing, would have been to look for a shorting opportunity there, a shift in market structure in the higher time frame. sorry, in the intraday time frame, which is the 15-minute time frame. But obviously there was no shift in market structure as price just went above, took out the short-term high, and structure became bullish instantly, okay, from this point onward. So this was no trade, okay, there was no trade right there. So now currently we are above the premium, we are above an old short-term high, which is short-term premium, okay. So the idea on this price action right now will be to wait for price to give us a kind of retracement, okay. We'll be to wait for price to give us a kind of retracement back down into this fair value gap, okay, and it has to reach below the midpoint, which is indicating that price is already into a discount side. Since this fair value gap is in between the midpoint, okay, so price has to reach for the far end of the fair value gap. So the idea will be to look for a short up here, okay, down into this fair value gap and see if we can get a long entry from there, okay. So remember, each time we take a short above here, that is counter trade trading, okay. We are trading against the order flow, we are trading against the the underlying bias, okay. So that is each time we take this trade, we are taking a counter trade setup, okay. So I just wanted to point that out. So the idea will be to go into this pair tomorrow and look for a short up there down into this fair value gap and possible continuation to the upside, okay. So remember, like I said, I'm not going to trade all these pairs, okay. I don't do lots of how am I going to put it, I'm bad at multitasking, okay. So I don't know how to do a lot of things at the same time. So I'm just going to focus on the few ones that I will, we have nice price action this week, obviously. So so this, okay, we have a break of structure, then a shift in market structure, okay. We have a run on liquidity above a short-term high, okay, which is a short-term premium, then shift in market structure and entry. This would have been a good entry down, okay. This would have been a good entry right there, okay. This would have been a good entry right there, okay. So now looking at price, you can see it comes back down into a fair value gap that was left imbalanced, that was left open, okay. So it came back to the balanced price. So now that's one thing about price, like we always said, okay. Price is always seeking for one of two things. It's seeking for liquidity or imbalance, okay. So price is always seeking for liquidity or imbalance. So just imagine we had a price that that skyrocketed, that took off, expanded high, okay. So and all it has to do was to come back and fill this imbalance that it left open, okay. So now the idea right now on this pair, we need to look for a long positions, okay. So this is our current daily range, okay. So this is my current daily range, and the idea will be to look for, to study price, okay. Study price and anticipate a long entry. Since you can see we only have one move below this old low, we have a shift in structure since price created a lower low right here. So this became our dealing range, right? So now, so this was our shift in market structure, and price came back once again and is trading at this other block, okay. So now the idea would be to look to see if this old high gets taken out, okay. If price trades above this old high and come back for retracements, I'll be to look for a long entry up here into this fair value gap, okay. So I'll try and look for long positions down here, okay. Obviously the trend is very bearish, right? The trend is still very bearish. So we already have a run on liquidity, shift in market structure, retracement, okay, back down to this other block, okay. So let's see how that looks like on the lower time frame. So we had a price that was going down, and okay, we had a run below this old low, a shift in market structure, okay. So now we have a nice price action, right now on the lower time frame, okay. So obviously you can see we have this move up, okay, this move up, and we have this fair value gap, right? So I'm going to watch price trade down into this fair value gap as a point of interest. Then I'm going to go to the 1 minute time frame and look for a shift in market structure, to go up. So if I'm able to get an entry tomorrow, long entry, I'm going to aim for this high and above the midpoint, okay, which is going to be something like this fair value gap, okay. So this fair value gap is going to be a good exit for me if I'm able to get an entry, long entry here. Or if Okay, so unless price decide to continue expanding lower, okay, if it keeps going down, then I'm just going to go to the sideline and watch. Okay, so remember, these are all the plans and possible trading plans that I'm going with tomorrow into the marketplace. Okay, so these are not trade signals, and these are just reference for you to study with. Okay, just making reference for us to study with. Okay, so we have a consolidation, the market that moves above an old short-term high. So this is short-term premium. So this market is sloppy somehow. Okay, so this is our dealing range, right, to this high. Okay, so there's nothing much to trade on this pair. Okay, but you can see we already have a move above an old high, and there's no much institutional reference points to expect price to react off on. Okay, so the so this is going to probably look like, okay, so this is probably looking like this. Okay, so price, there's no institutional reference point for me to buy at. This fair value gap is already filled, although we had other blocks. Okay, we have OBs right here, but they are not associated with fair value gap. Okay, none has a fair value gap attached to it. So I'm going to be on this pair. Okay, I'm going to be on this pair unless if it takes out this short-term low. Okay, if it takes out this short-term low, then probably buyers have shifted in structure to bearishness. Okay, so it's still very much bullish. Okay, so I'm not going to put much of an interest on it. Okay, so let's look at the Australian JBY. Okay, we have a bearish market structure and a move into a previous fair value gap. Okay, so this market is consolidating, currently trading at a fair value gap, bearish, though we had a run on buy side liquidity, sorry, sell side liquidity, shift in market structure, and this market is currently bearish. Okay, trading at a fair value gap and moving sideways, so I'm much not interested on it right now until it gives me further evidence of willingness to continue going up, or if it shows the willingness of wanting to go down. Okay, so we have the Euro JPY, we have equal lows taken out, shift in market structure, but there's no fair value gap. Okay, we have one below here. Okay, and price has not shown the willingness to start retracing, although it creates short-term low, takes it out, short-term low, takes it out, and it has to show me the willingness of wanting to retrace back down. Okay, so my institutional reference points will be this last up close candle before this down move, which is a breaker block. Okay, and we also have a fair value gap right here. Okay, so the idea will be to wait for it to show more evidence. So my bias on this is bullish. Okay, my bias is bullish on this particular pair, but I'm going to watch it show more evidence. Okay, it's kind of consolidating right now. So we have another similar price action like that. We have this equal lows, price breaks down and retrace back into a fair value gap. So this is obviously a bearish market. So we are currently trading in a fair value gap. Okay, we are currently trading in a fair value gap right now. So the idea will be to look for short opportunity down. Okay, for a continuation down. So we are currently trading at a point of interest for me right now. Okay, so going down to the